There's a whole list to talk about in today's markets, whether it be the stocks, crypto exchanges, and precious metals, and even predictions of what the Fed's going to do tomorrow with potential of another rate cut. So today I'm going to break a lot of things down, and near the end I'm going to deliver my thoughts of what I think is going to happen not only tomorrow but also what if things were to happen going forward. So let's begin. So today in the stock exchange, we have the Dow starting out at 2,700 points, and then it slightly rose just below 50 points. And from there we can see that there's not really a lot of movement going on, and the same can be true for the crypto and precious metal exchanges as well. You have Bitcoin and other cryptos just slightly hovering around the same level. Same thing with gold and silver. Well, there's a slight increase in gold and silver, but not compared to the increase in value compared to Sunday and Monday. And so what I think all is going on is everything's all built around what's going to happen tomorrow with the Federal Reserve, and is there going to be another rate cut or not, and by how much is what I think is all this is being bet on. And so with the federal rate cuts, there is about 63% confidence in that there will be a rate cut, but there's also an increase in confidence that cuts may remain the same as well. And this is according to the CME Group's Fed Watch report. And so far we're seeing a slight uncertainty, an increase in uncertainty of how this whole dynamic tomorrow is going to play with the Fed. And as far as my opinion is concerned on tomorrow's event, I do believe that the Fed is going to have no choice but to cut, but I think it'll be anywhere between 25 to 50 basis points. And this is mostly just to kind of keep some confidence in the market, but also because they're under pressure from guys like Trump and others to make sure that he's able to, or at least keep up the illusion that the stock market is doing well. But on the other hand, I do have my own predictions of what would happen if, let's say, the Fed only cut it about between 25 to 50 basis points before their December meeting, and what would happen if they cut between 100 to more basis points come their December meeting. Because I do think that what happens tomorrow is going to be what determines when, not if, this recession/depression period will occur. And so here's what I think. I think that if the Fed only cut about 25 to 50 basis points between this next meeting and the one in December, so even if it was done between 25 or so, however you put it, let's say it's only 50 basis points that's cut before that meeting, I believe that the stocks will eventually collapse and we will be headed quickly into the depression, because right now nobody is really buying anything. We have auto industry, manufacturing, housing, retail, everything's going down. And so only giving mostly the rich and stuff like that only 20 to 50 basis points to cut from is not really a lot, when we used to have nearly 10% and more in interest in the past. And so giving them only 1/4 to 1/2% in cuts is really not a lot in their minds, and I think in many of our minds it isn't either. And so if that were to happen, nearly guaranteed that the stock market will collapse. And so, but if we have a 100 basis points cut or more before the December meeting, then I believe that we'll be able to hold off these markets to closer to around March, April, maybe even June. But at that point, I think that the Fed was going to have no choice but to go down to zero, if not negative interest rates, because right now, countries all over the world, including Japan, Switzerland, and other places, and even across Europe, are all now going into negative interest rates. And so eventually the U.S. is not going to have a choice but to follow suit if it wants to prevent this next recession within a certain time frame. It's either it happens in the next couple months or it happens in the middle of next year. And that's where they're at. I don't think this is going to continue out until November 9th or what have you, because there's just not enough basis points for them to cut. And if you go to negative, then the bank's just taking everybody's savings, and people who are living paycheck to paycheck, which is roughly 83% of the United States, is then going to be cut down to nearly close to 90, because all those people that might have had some savings, they won't have any savings in their accounts anymore. Same thing with some of the rich as well who have their money in banks. And so, and plus there's other events you have to take into consideration when it comes to how this recession might occur, because there's always talks about black swan events coming out. And so we've had the recent Houthi rebel attack on the Saudi Arabian Aramco facility, and that caused a spike in the oil price. And even though Saudi Arabia claims that they're going to be able to fix this by the end of this month, there's some concerns that it actually will. And then there's also concerns of the Houthi fighters actually still retaliating again, because, and this is a source from RT, Russia Today, that one of the leaders said they could strike again at any moment. So there's that, and because this whole dynamic with Saudi Arabia and Yemen's been pretty one-sided, with the Saudis trying to commit genocide on the Yemenis. And so I do believe that they're going to strike back eventually again, just to try to put more pressure on the Saudis, and that will cause prices of oil to remain high. And depending on how long that persists, and also these Fed cuts as well, where it goes, is going to impact when this recession is going to occur. Because right now we don't have, or at least the Fed and the stock markets, they don't have much time. It's a lot sooner than later, and it's pretty safe to say that between December of this year and June of next year is when it will fully go into effect. And then you also have, and a lot of people don't really talk about this, you have the October 1st fiscal cycle in the United States, that it's the largest military budget that's ever put together. You have everything plus $178 billion combined, with healthcare, infrastructure, education, everything taken out and put into the military for the next two fiscal cycles, so between 2020 and 2021. And so what you can expect, there's going to see a lot of layoffs in a lot of the labor jobs, manufacturing. You're already seeing it with General Motors strike, as that's costing General Motors about $100 million a day for these strikes to continue. And so, in my opinion, anything that you see, like any product you see that needs to be built right now or being in the process of built, there's a good chance by next year or in the year after it might not even be completed or not even close to being done because of that, and that might even still cause the recession to occur, another black swan event that not a lot of people are talking about. Then you also have the tariffs on China that were originally placed on the same day that the fiscal cycle would start, and that was pushed back to October 15th. It was going to be about $250 billion on imports, which, funny enough, was General Motors' reason that they're shutting down 5 of their facilities and sending them to Mexico because of this tariffs that the Trump administration's been doing to hurt their steel and stuff like that. And also, not a lot of people are buying their new cars like the Chevy Cruze, and they believe that this plan is going to save them $6 billion, which is why General Motors is shutting down and these strikes are going on. And so you can really see that everything in part has an impact of what's going on. So there's not a lot of time for the Fed to save these markets, and like Trump said, he really wants to see a 0% interest, if not negative. And although many people don't agree with him or don't like him as a president, I do think on this particular issue that he's right, but it's also self-interesting. We all know that. But I do believe that if they cut about 100 or more basis points before the December meeting, then they'll be able to push back the recession till later, because that's going to increase more confidence in the rich trying to spend money. It's going to help the real estate bubbles more the speculative people and things like that. But that's only going to last for a while, obviously. But only giving them 25, 50 basis points to work with is not going to be the difference. And people trying to purchase houses and stuff like that, especially when a lot of markets are suffering. And so from there, it's all this is going to be based on tomorrow, how the stocks, the Bitcoin, gold, and silver exchanges are all going to go. And I remember last time, it was in July when the Fed originally cut at 25 basis points. The precious metals and the cryptocurrency markets, they slightly rose at a point, and also the stocks went down a little bit. But in my opinion, it depends on who you are. At this point, it's going to depend on what do you want. Do you rather see a large interest cut right now, and you might see a short-term rally in precious metals and stuff like that if you're someone who's into precious metals, but the number goes back down into a bear market in December, January, February? Or would you rather have basically not much of a cut or no cut at all, and then when December, January hits, it's going to be very bullish regardless if there's a cut or not, because at that point we're headed for a recession? And so that's the only thing I want to leave out to you guys. And that's the end of this video. If you like it, make sure to subscribe. And as far as donations, I'm only accepting cryptocurrencies like Bitcoin, Ethereum, Litecoin, and XRP, mostly because that in these uncertain times, I believe in the long-term store value of crypto and precious metals, and you can even buy crypto for precious metals. And so right now I'm just trying to stick with safe money as best as I can when doing these podcasts. So thanks for tuning in, and I'll make sure to follow up with tomorrow's Fed report and see how much they cut rates. Do they cut it all? And what my predictions are going to be long term. Anyway, thanks for tuning in, and see you for the next video.